The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento. Just found out that Larry won't be able to make it. At least so far he's not here, but we thought, okay, while I'm sitting in the chair, we'll just continue with the show. Usually I'm on 11 o'clock till noon Eastern time with my Tiger Technicians Hour, but I'll be doing this extra hour and we'll see what happens. Dow's up 130 at 17,892. S&P's up 15 at 2,081, and that's a little surprise. It's a little surprising to me. I just realized that when we're looking at markets, what happens sometimes, I meant to mention this in my show and I forgot. What I meant to mention was that sometimes I've noticed over the years that when we are closed and Europe is open, and if there's an economics report, periodically, the market has no knowledge, when you look at the chart, of anything amiss. In other words, if we were open Friday, at least intraday, we would have had a huge downside smash when the jobs report came out. Bad jobs report. And what happened was futures dropped very sharply, both on Friday morning up until 9:15, I think it was, Eastern time from the 8:30 report. And then when the market opened in Europe, there was just kind of a little nebulous slight down move, and then whoosh, the market went down, and the S&P futures, which had been down as much as 20 on Friday, were down another 17 points overnight. And even this morning, it tried to come back and it kept fading, and the futures were down sharply. Down was 140, and then 130, then 118. And then the market opened, and the market pulled back very sharply at the open, and then started a steady move up. You can see by this candle, look at that candle. See, the wick went all the way down, the Dow to 17,646. Let me just see what happened in the, and then look, the VIX index popped up to 1576, and now it's trading down to 1459. Now you've got yourself a leg C in the 120-minute chart of the Dow, and most importantly, the ARMS, Richard ARMS index, the short-term trading index, only popped up to 135 and is trading now at 0.78. So far, that's kind of a good sign saying, hey, we ameliorated. Fascinating. If you look at this chart from Thursday's close to right now, you would not say, oh, okay, there's a little wick there, big deal. Now look, we're nicely over the 9-period exponential moving average. Ho-hum. And what's basically happened is that all that negativity, and that was huge. I mean, put it together, you've got almost 40 points of 40 points in the S&P. And yet right now the S&P is up 15. So that's 55 altogether. So you do have to respect that. However, put this into the big picture, and what is the big picture saying? It says, hey, it's just another U-shaped formation. Yep, we could rally a little bit more, but we're making lower lows and lower highs, even though they're not very deep to the downside. 17,620 was the low of the 12th of March in the Dow, and then 17,579, the low of the 26th of March. Not a big deal. It's 40, 50 points lower. But what's really important is that within this context, look at this. If I show you this particular index right now, wait a minute. If I show it to you, I've got to get it right. So let's go. Now look at this. Let's move this 120-minute chart away, and look what we've got. We've got lower highs and lower lows in this particular chart. Got a potential for a peak F. It might change, but I can just tell you that if this particular index starts to trade over there in the monthly in this monthly chart. Not a good sign at all. It's probably going to have to be called a peak F. But wait a minute, what is this chart? This is the chart of the IYT, the iShares Transportation Average ETF. And yes, it's only gone sideways, a high-level consolidation, as the technicals have failed quite miserably. But it's still making lower lows and lower highs. And the monthly chart is going to be very interesting. We're only, what, the third or fourth trading session of April, so we don't know exactly where it's going to be at the end of April. But I can just tell you this, that monthly chart is saying, I've begun my descent. The stochastic is down, it's under 80%, it's 78%. On-balance volume is down. Relative strength is, no, I don't have relative strength here. And the MACD is crossed negative, but it is the beginning of the month, so we don't know if it'll close negative. So this says watch out, because if the transportation, I don't really go with all the years that I've followed it by hearing what people say. I'm really not a big fan of the whole Dow theory. It's getting much more complex now. We don't have the same implications that you had back in the 30s and 40s with the transportations. So that's what I'm pointing to, that the IYT is saying, hey, I'm struggling here, and crude oil has been down. So what the heck is this all about? Okay, so here's the other thing. When you go to the IBB should try to rally today. Yep, it is. It's up 80 cents. But it's really not a great chart pattern. It's struggling. It is really struggling. And that weekly chart with the peak D sitting now right on that 9-period exponential moving average says, watch out, because look at they go together, the XLV and that's the S&P Select Healthcare Spider Fund, and the IBB, which is the NASDAQ Biotechnology ETF. And they both saying, I've had a great run, but at least in the shorter term, meaning 4 to 6 or 8 weeks, I just need to digest these gains. That's kind of what it's looking like. So this makes it very important. If I go to the XLK, I'm going to pick it up, but I might not have it all notated. I had it. Oh, yep, I do. So this is going to be a peak D in the daily chart at 43.46 on the S&P Select Spider ETF. And then it pulls back quite sharply under 41. It's only 2 points, 5%. But in this particular index, which is kind of reluctant to do that, that's becoming a bigger move. And now this is going to be the most important thing. I'm watching this closely for April. Why? Any way that I notate this, I'd be using techniques that are, I would say that they're not really legit, in the sense that it made a peak B in the weekly all-time high, in the weekly chart, that is. I don't see how I can call it anything else, because after G you don't get an H, it has to be a B. I can't get a recycle because there's nothing the trough for that D on the left side. We're all the way down there. That's not a legitimate thing. So unless, and I can't call this FG again, H, it went to a C and then failed. So there's a chance, and that was at an all-time high. So as I'm doing this over the past couple of weeks, I'm looking and I'm saying, you know what? This is the very first time in the Chapman wave methodology that I've got alternate counts that basically look like they failed at highs. And that I have to now put into the mix. They'd never done that before, not a lot, but enough. If I get 2 or 3, to me, that's a lot, because I'd never even had that before. We didn't have an alternate count. So if this peak B fails by going underneath 39.39, and it's at 41.69 right now, it's 2 points lower over the next week or two, I'm going to have to say, hey, that's really interesting. So I do want to respect for the strength that I'm seeing right now, and it's holding the up channel inside track support zone right there. And the technicals are weak, so this is good action. There's a bounce. So what I'm saying is, I like to look at many aspects, and I use all the tools in my toolbox, because now I'm beginning to find that once in a while, the Chapman wave methodology, in not hundreds but thousands of charts, is starting to show that maybe at tops, occasionally, you can get something like a C or a B. and it doesn't go all the way to a D, and it fails. It hasn't yet, but I'm just saying that's what got to keep in mind. And it's very important. If I run through my Dow Quartet, GE's a nice candle today, up 1.30%, up 32 cents. Hey, that's nice. And not only that, look, if I draw this, take that trend line, and I move it there, it says that it coincides exactly with the 2539 200 period exponential moving average that would be the resistance to look at. And that's at 25.26, up 32 cents. Good action in GE. But wait a minute. Let's go to the next one in my Dow Quartet, IBM. IBM is holding well. There's another trend line, another one exactly like it, 3-4 times hit. Let's see if it's able to pierce that. If IBM breaks above 162.67, that's a point higher than where it is right now at 161.70. That'll be good, and that'll start to improve the weekly chart for sure. So far, you'd have to see IBM break under 158, GE break under 24.80. It's at 25.26 right now. Triple M, which is one of my Dow Quartet, nice candle today, but it's just a reflex spike to the upside. It's done that before. And the weekly chart is, so far I can call it a high-level consolidation. Monthly chart still looks great. So what I'm looking at is if Triple M, trading 165.30, up 250, up at 1.54%. If it breaks under 163 in the next week, that'll be a negative. But if it takes out the low of this morning of 161.40, that'll be a big deal. That'll be a very big negative deal. On the upside, if it takes at 166.77, that's $1.50 higher, that's going to be a positive. Look at UTX, the final one in my Dow Quartet, UTX. Nice candle within a downtrend. Monthly says, hey, downtrend is continuing. So that's the weekly. The monthly says, sitting on the 9-period exponential moving average, no opinion yet. Technicals are shaky at best. And the price, though, is holding above the 9-period moving average of 115. And right now it's at 118.30. So that's the mix there. Good on the day. Slightly different opinions about the weekly and monthlies. So now that says to me, so the Dow Quartet on the day is acting quite well. GE in particular is acting very well and says there could be another push to the upside in the next day or two. It might help the market. Now let's look at Tesla, because Tesla, I just saw go buy on the ticker up 14 or something, up 14.85. Now, Tesla is a good example of a pattern that said, if you are short, that's fine, because there could still be pop-ups, except for this very last decline, where in the weekly chart, it did not break the low, so made a peak, a trough D at 181.40 last week. So I'll talk about Tesla, and I'll talk about what we're looking at, how this rotation's working, and what stocks might be helped. I'll be right back. Basil Chapman sitting in for one and only Larry Pesavento.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartlys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I know it said Larry will take your calls, but this is Basil Chapman singing for Larry, and I will take your calls at 877-927-6648. Dow's up 151. S&P's now up 17. Very, very interesting. Now, there's... To my eye, there is something going on here, and I saw it a little bit last week. There was short covering and a little bit of new buying. A little hard to define exactly what or why and how I'm able to decipher that. But that just, I guess, is just experience that says that. I'm not sure about, and there could be rotational buying, in other words, in sectors that were very weak. But this is what I think I'm looking at, and Tesla seems to demonstrate. You see these spikes to the upside in the daily. You got this gap up, you know, you get 198.85, 192.65 on the 17th of December. Next day, bam, opens at 212.38 and goes right to 218.44, and then sort of squeaks along and makes a peak A and then a peak B, and it fails, and it takes it out and comes all the way back, goes to 185 round number low. That is on the 14th of January. Bam, it goes A, B, C, and fails, and it comes back. And then it comes back to the 12th of February. And has a pop-up again, and then squeaks to higher highs, comes back down. So now it's gone. The most recent low is 181.40. Let me just type that in, 181.40. We're talking about Tesla, TSLA. And then what does it do? It has quite a strong candle just straight after that, has a weakish candle the following day, makes a peak A, pulls back just a little bit, holds the 9-period moving average, and then out of the blue from Thursday's close at low was 190 round number high, the low was 190 round number. The close was 191 round number. And then out of the blue, you get today's spike with a what? With 198 round numbers. So you've had 3 round numbers. It makes it real easy. If Tesla is going to fail with yet another just peak A, peak B, and then all of a sudden it fails, or maybe even a C, it's going to fail under 213, and that 213 is the resistance level that we've been looking at for ages. I've been talking about it every time it's come up, and it's been repelled at that 200-period exponential moving average. Will this time be different? We don't know, but I can just tell you that the 200 and let me just check something. You see where it closes today, if it has a 200 and something round number close. But the open so far is 198 round number. If it goes under 198 at any point in the next 3 days, watch out, it's coming all the way back down again. This is just another reflex rally. These look like biotechnology reflex rallies, but in a way, it is a biotechnology stock in the sense that it is looking at oh, that's a pity. Oh, wait a minute. In the sense that it's looking at the way the market is responding to certain stocks that have been beaten down. But in fact, if you look at Tesla, all it's doing is it's in a very wide. You know how I talk about a consolidation phase at the upside? This is really a support level. It's trying to form a base. It's trying to form some kind of a bowl formation like this, a bowl, not a bowls, but a bowl formation. And that makes this particular rally, as I said, very important, because if it's able to use those 3 round numbers as a springboard, then it should close somewhere above, what's it, 205.30, somewhere above 203 today. And then it has to have a strong Tuesday and Wednesday to try to get very close to that 213, 200-period moving average that has been the repellent. It's snuck above it many times, but it's never been able to hold above it. It keeps coming back down. So that is becoming more and more a magnet line. And then if it becomes a propellant instead of a repellent line, once touched or approached, you'll start to see the 211 to 13 area become support. And they did come out with earnings. I think they sold more cars, something like that. But here's the weekly chart. You see this weekly chart? Now, I tend to treat these as moments of importance, but in the end. And that is the downtrend line is very strong and very long. And it says from the 291.42 high that was made back on the 5th, the week of the 5th of September, every rally's failed and has gone to lower lows and lower highs, and that trend line has been incredible resistance. This is the first week that it's actually snuck above, but we're only 2 and 3 hours into the session of the first trading day of the week, so we don't know where it's going to close. It's important that it broke out, but very soon this line is just going to become another line, and you'll start looking at arch formations. I'll be back. Basil Chapman sitting in for the one and only Larry Pesavento. I'll be back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman sitting in for Larry Pesavento. And we're looking at, because it went by on the screen, on the CNBC screen, I saw something about earning sales of cars. I wanted to see what Tesla was doing, and I wanted to discuss it in terms of looking very much like a biotech stock in that there was a cycle to it. It's like almost like a news cycle that keeps, well, cycle is probably the right word, being four wheels. But when you're looking at the way the chart suddenly pops up and fails, I was saying that this particular move right now is probably in the last month. This is the one that counts the most because there's a little bit of good news to it. But every gap has been filled at some point within a week and a half. Most importantly, what I was saying is that there was a positive divergence between the stochastic, the MACD, and the latest price coming down to the 181.40 level, and that suggested to me that I was a little surprised when I saw it go by that the earnings, that their sales were so good. I thought I'd been reading that the sales were a little bit down. Maybe that was just in China. However, it's up 14 at 205.79, and what I was saying is 205 to 203, I think, should be support as I'm looking at it right now, based on the 120-minute chart, which has made a leg C. Looks like it's a peak C if there's no new high in this bar. And then I suspect we go to a D. Do we go to the D at the close, or do we go to a D tomorrow? Or that's something we won't know. But I was also saying that the weekly chart had this trend line coming down. I happen to find these trend lines always quite informative in the sense that I have to look at other patterns, and at some point, what looked like a trend line that you just had to take very seriously just turns out to be another line in the sand. That's the way it is. And that's what I would do. If there's a close this week above the trend line, to me, all of a sudden that trend line, I could just get rid of it, because look how many times it gets there and then it fails. So if it breaks above it and holds, it says you've done your job, but you don't need this line anymore, because you could come back and test it, but I've got other lines to give you that kind of support. Most importantly, what I would then do is say, I think there's going to be another arch formation forming in Tesla. And it's just like Tesla's like a commodity, batteries. So it's like almost all the commodity stocks, like crude or anything like that. Anyway, that's just my opinion. I just wanted to do that because it went by and I thought, whoa, I haven't looked at Tesla for a while. So it's been very weak. I think it's going to remain weak, but it could have a rally in the interim before it comes back and retests going below 180. But we'll see. In the meantime, I just want to check. So question is, here we go. Let me move that away. The question here is, can you just go through the numbers, because you didn't do that in your show before? Gee, I'm sorry. I usually do that. I must have been busy and forgot. So the TLT is down 91 cents at 129.82. It was so easy for this to try to get above leg B and then peak B at 132.76, and it failed. What's it doing now? The commoditization of commodities. Yields are going to rally a little bit here, but in the longer aspect, I still think that we're looking at yields becoming Japanized, that is going to 0%, just like Japan did. And that makes this low right here at 129.18, the left side low of the 26th of March. Really important. Look at the weekly chart. I drew this in a while back, that arch formation. So it just says maybe yields are just stuck in a little trading range right now. We'll see about that. But those are the parameters I'd be looking at. Bonds. That's the 20-year Lehman T-bond fund. This is the bond itself. Leg C, now it's making a potential peak C today. Yeah, it's going to be peak C. There's no way by the end of the day it's going to rally from 163 and a half to 166 and 27, 30 seconds. So there's going to be peak C. So we're going to be watching this really close. As I say, I just think, look at the yields, TYX.X. There it is. There it is. And the yields say we've gone to a peak C right there. That was at 27.44. 27.46 is D. And then you get that spiral up. That's your rogue wave, or whatever you want to call it. In this case, a right arm extension. And what happens is that's your down arrow. This one didn't have any of the technicals allowing it to be an arrow, for an arrow to be put there. And now you've got the consolidation that comes back. And what's it trying to do? Yields are trying to form some kind of an H pattern. What was the stock we were looking at before that had the same thing, that said there was an H pattern that could become a successful, let's make it curved this time. There you are. So that says, yeah, yields could rally. They're at 2.571 for the 30-year T-bond yield. We could rally all the way to 26.50, maybe hit this candle right here, 26.85-ish, somewhere around there. Just needs to be watched, but the technicals the price needs to confirm the technicals, because the technicals have rallied quite well. Price hasn't rallied all that well, so there's a bit of a divergence there. So we'll be watching that. Then, so now let's just do this. I'm going to run these together. So the Dow. A nice move to the upside, very nice. 151 up, 17,915. But until the Dow starts to trade at 18,050, I have to consider these are just rally failures, and that we're going to be coming back. I must admit, it's very impressive that the inside track of the weekly chart held beautifully this morning. Look at that. Look at that. That's the Chapman wave inside track, rising wedge formation. Got to respect that. If there's a close above last week's high of 18,008.64 on Friday, I have to respect that next we could see a move to the upside before coming back to test the 9-period moving average at 17,000, somewhere around 17,000, 17,850s. Now here's the 17,000. I shouldn't just do that, but top 860s. And then the monthly chart, there's nothing to discuss. We've got the whole of April to go. It's held the 9-period exponential moving average. Technicals are starting to weaken, but there's enough strength to hold above the 9 EMA, and that's important. S&P, SPX.X, let's just do this. Why do I always have to do that twice? Same sort of thing. Bounce, it's held the up channel inside track. This is a channel, not a rising wedge. Inside track, very important. So I could have done this. You see that? I wanted to show you something that's quite important in my work. You see the way this up channel has been respected since July of 2013. Once in October, we smashed right through it, and then we went to 1820.66. But lo and behold, the very next week, this week of the 24th of October, whoosh, rocket ship out. Just couldn't take the strain of being underneath that up channel support, and went right above and went to the resistance. Now we're bouncing, we're holding the 9 EMA. So that makes this Friday so important. Why? Because if there's a close below last week's low of 2048.38, it's going to suggest an arch formation with a peak C1, C2 double top that could in fact take time and price and take the S&P down into the mid-2000s to the low 2000s. If there is in fact a close that's up in the 2097 or 2100s in the S&P, that is just impressive. You just got to say, this mega bull market does not, it's actually a funny thing, because the mega bull market does not want to change its stripes at all. The bear has lost its stripes. There is, to be bearish, you have to time it perfectly, and you have to get out. You can't stay around. That's the thing about this mega bull market. It's not that you can't be right. It's that you are wrong if you are long. You're wrong if you are in too long. It's just real simple. So the next time there's really a deep correction to the downside, it's going to be a big surprise to a lot of people if, in fact, we remain lower. And that's what you got to be a little bit fearful of right now. That, in fact, people are a little too complacent. You can see by this 120-minute chart, it feels like a big move, but this is really just within the trading band, another arch formation that should go to an M formation, lowercase m, in the S&P. So let's just run the IWM, which was a leader, then it was a failure, then it became a leader, and now right at this moment it's up 57 cents, the IWM Russell 2000 at 125.22. Most importantly, the weekly chart is showing no sign yet of a turn down. The monthly chart looks great. The daily chart was looking poor. It's come back very nicely. All I can say is it's not a break above the all-time high of 126.32. It's a close above 126.58 or higher that would make a big difference. A close in the daily, not just bumping up and coming down. Okay, QQQ right there is up at 106.00, up 88 cents. I would say that until it can break, it needs to close, not just break above, but close above 106.82. If it does that, that will be quite impressive, because it's really going to help the weekly chart, because the technicals in the weekly chart are not that good. Monthly chart, technicals are starting to fail, but the price is held beautifully. At some point they catch up, but not just yet. So that's that, and I want you to look at the NYA, because I know Larry always likes to look at the NYA, the much broader measure of what's going on. The New York Stock Exchange looks like it wants to go to that leg D above 11,115.58. And if it does that, it's just a whisker away from the 11,142 all-time high. Oh, I'm impressed. That is very nice. Now, is that the all-time high? 11,102. Wait, why am I getting 11,102 in September? So what am I looking at here? 11,142. Hello? Sorry. I was looking right there. There it is, 11,142.56. It recycled. That's right. It recycled, which means that if the New York Stock Exchange goes above 1 penny, above 11,142.56, doesn't have to be this week, it's this whole month, that will start leg C to the upside. Remember, that's one of the reasons why I said that in the longer term, I'm still very bullish. It's the short to intermediate term that I'm watching this real closely. Very interesting there. Okay, now let's do something else. I wanted to look at the dollar again. I looked at it earlier in my show, but now I want to look at it again. See, the dollar's trying to make the 96.63 in the index itself, that double bottom on the left side. So far, it's acted quite well, but I can just tell you it's 96.17. That's the level I'm looking at. So the whole 96 is if the dollar closes below 96, let's call it 95.50 to give us some room to the downside to say, hey, I'm really failing. I'm not bouncing back for that H pattern. That would suggest to me that the weekly chart is starting to fail as well, because that has a 9-period moving average support, and that support is at right around 96.30. Not far away from here. So I'm going to be watching to see if that breaks by Friday. And then you've got the euro, EUR/USD. And the euro is saying, I'm going to try for leg D, and I just need to go 1 penny above the high of the 26th of March of 1.105116. And then I'm on my way to leg D. And that's going to be very important. That will coincide with the H pattern. See, it's the same pattern as the dollar, but upside down. So you've got this cup formation. And this says you want to see a cup breakout. You don't want to see it hit that level and then fail, because that's going to say is, double top, short term. So, okay, that's that. And I wanted to also do high-grade copper. I never did that in my show. I meant to do it. I forgot. Had a big spike. If I saw this earlier, I would have said, hey, that's great. It's trying to go for the 286 level of the 200-period moving average. But it didn't do that. Instead, it failed, and now it's at 2.7135. High-grade copper is something to keep an eye on, because if high-grade copper goes under 265, starts trading in the 265 to 260 area, it says, hey, good chance that I'm going to be coming back and test the low of the 18th of March. That's going to suggest that world economies might be slowing down, going to be using that as some kind of a benchmark. Now, I also want to look at the HGX. How is that doing? Where's the leadership today? Well, look at that, leg E in the HGX index. That's the Philadelphia housing sector index. And if you look at Toll Brothers, TOL, nice move up. Is this a recycle ABC, or is this a leg F? We don't have to even think about it. It's acting very well. We can just put in an F/C. That explains that. And nothing to do if you're long, because it's still acting well. F, leg F, or it could have recycled to a new B in the weekly chart. Why? Because the technicals are great. There's no reason why not to think they couldn't recycle. That's Toll Brothers, TOL, trading at 39.95, up 3 cents. It's only up 3 cents. You see, this is a real mystery. So now look what we've got. We've got leg D in Lannar. And that's leg C in the weekly. That's a positive. And leg D in the monthly. So we're going to be watching this, because if there's a move up and then down sharply, that's going to suggest that Lannar is failing. If in fact it just holds very well with 51.47 support, it's at 53.38, down 81 cents, and then goes higher, that'll be very good. I'll be back. Basil Chapman sitting in for Larry Pesavento. Right back after this important message.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So this is what I just want you to look at the XLF, which is the Select Financials. Nice candle today. It has many of these nice candles within and goes kaplop. So we're watching this real closely because it's just a high-level consolidation, nothing here. And my suspicion is that later in the year, you're going to find that the XLF has bias, that there are people saying, fund managers saying, hey, just way too cheap. And yeah, the rates will go higher, and that will help the banks, and they might anticipate that move. But right now, it's just stuck in a trading band, and that band is between the 2470s and the 2370s. 1 point has been the range. It's hard to believe that a financial instrument like this could have a 1 point range, less than that, but a 1 point range that's going back all the way to February of this year in the weekly chart. Maybe there's even another oval pattern. Let me just draw that in. It gives us some sense of parameters to look for. Yeah, I can do that. Look at that. just stuck in a little range. And look at that monthly chart. So we're watching this closely. So what am I looking for? We've got just a few minutes, and then we're going to go to Daryl Martin. We've got Dave White. We've got Tom O'Brien. Just fabulous shows coming up. So this is what I wanted to do. In looking at the markets, the VIX index is very important in my work. It's trading at 1451. It made a low today, somewhere in the 1404 or something like that. Right at this moment, it's suggesting, by being now it's down 17 cents. In my show, it was up about 7 cents, and it was down, only up 1 cent. And I said it should be down more than 20 cents, should be down to reflect the move in the market. Now it's showing that it's down 18 cents, and that's suggesting that that's buying pressure. And I'm watching this real closely because the weekly chart is still saying that the 1490s is the hugging area of the 9-period exponential moving average. It just doesn't want to break away from that. It doesn't want to break upside. It doesn't want to break downside. Because in a sense, it's giving you support to the market. In another sense, if it starts to break into the 13s, that's just buying pressure. That's going to sustain a move to the upside. So I'm very aware of that. And as I said, for my opening call subscribers, we've got a real mixed portfolio. We've got longs, we've got shorts, a fewer shorts now because 2 were taken out earlier. Just made tight stops. That's the way I wanted it. And we'll just deal with that. And some of the stocks we are short, it's very interesting. They're just trying very hard now with the market coming in to start to move to the upside. But it's been a real struggle, which says to me that they're not leaders. They are followers now. They were leaders. I'll be correct if they manage not to be stopped out in the next few days. But I just felt very strongly that there's certain sectors that are suggesting to me that they are kind of done for in this particular move. They need to rest. They need to pull back. They need to take the time to reorganize, to reconcentrate leadership, etc. That's my opinion. We'll see what happens. So in the meantime, back at the ranch, those are the things I'm looking at. If the VIX index climbs into it's at 1448, climbs into the 1520s by this afternoon or early tomorrow morning, that's going to put selling pressure back into the market. If it continues to hold in the mid 14s to the low 14s, that's just simple. Call it buying pressure, and that's the way it is. In the chart itself, it went to a peak A, B, and then it failed at a C. It almost made a 1353 to 13. 55. Okay, there it is. That's amazing how many. Unbelievable. I'm always so impressed. Chapman wave went to a peak D again, and kaplop. Ever since then, it's been a tough ride for the VIX index. There it is, up arrow and down arrow. Okay, so those are the parameters I'm looking at. Just keep it as simple as you can. Thanks for being here. Have a wonderful day, and I will be back with my show 11 o'clock tomorrow, Tuesday, and just have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.